It's Friday, October 23rd, and we're about 3 hours into trading. Hello, traders. Market's in a little bit of a downward sloping channel this morning. We're not getting a stimulus bill, at least not so far. What I'm hearing is that even if a stimulus bill is approved after today, there won't be enough politicians in D.C. to get it through. They're going to be returning to their home states to campaign ahead of the election. We also have the confirmation of Amy Coney Barrett, likely on Monday or Tuesday. I think that's also going to sour the negotiation tone. So if a deal doesn't get done today, it's not going to get done. And I don't think the market's going to like that. I think that the only thing keeping the market afloat right now has been the potential for a stimulus bill ahead of the election. And without that support, you're going to see asset managers who are trying to reduce risk ahead of the election overpowering that bid that used to be there. Translation, I think that any surprise today favors the downside, and I don't think that a deal is likely. Yesterday, Nancy Pelosi said that they're making progress. They asked Steve Mnuchin if he's satisfied with the progress. He said, it's pretty good. Pretty good is not a ringing endorsement. Yesterday, Larry Kudlow said that, and that's Trump's economic advisor, he said that they're still a long ways apart from getting a deal. I don't think it's going to happen. I think this is going to drag on. If we have a long time before we can determine the outcome of the election because of mail-in voting, it could postpone the stimulus bill by who knows, maybe 3-4 weeks. Right now, we need that stimulus bill. Economic conditions are starting to soften. We've got a lot of major metropolitan areas domestically and globally, like in Europe. Europe is primarily shut down right now. This is going to weigh on economic activity. So I don't see a great backdrop into the election. However, I want to cast some light. I think that anything that happens pre-election, if we get a big market pullback, it is going to set us up with a buying opportunity. There will be cash on the sidelines. Once the dust settles, I think it's going to go back into the market. So I'm not looking at a long-term, prolonged market decline here. I just think that we could get some nervous jitters ahead of the election and that the market could come in today in particular. So I think that going into the close today, we're going to be looking for some lotto plays, could be looking for them on both sides. I'm going to be focusing a little bit more on the short side. Swing traders, we're in cash. I don't want to have any open positions right now. We had about 7 bullish put spreads on. We have 1 bullish put spread on right now. We also have a position in gold. Watch for the video tomorrow to be released on the YouTube channel, and you'll be able to see that position. So I believe that you need to focus more on day trading right now. I think you should keep your swing trades to a minimum. See what happens over the course of the next couple weeks. I'm going to show you some day trades, and then I'll also take a look at a trade that you might consider for a swing trade as well, because it is a post earnings trade. So you can see this downward sloping channel right now on the SPY. As long as this is intact, you want to make sure that you're favoring the short side. Ultimately, these channels have a tendency to be resolved like this. Boom, boom. Long red candles poking through the lower end of that channel. And that is usually when you have your selling climax, and that's when you have your chance to finally establish support. If we keep leaking lower and lower all day, there's nothing to really stand in the way of it. The market wants a stimulus deal now. Not progress, not nice chitty chatty. It wants a deal today. Anything less is going to spark some selling pressure. So that's the mindset that you need to have today. And if there's no good news coming out of DC, this is going to continue to leak lower and lower. So let's take a look at some possible trades. We'll go into that daily chart and see where our longer term support levels are. The 50-day moving average is the first level of support that we really have to watch, and then the 100-day would come into play. You can see how we almost touched that 50-day yesterday and we rallied off of it, leaving a bullish hammer. That's a nice little support level right there, but we're starting to lose some steam here. You can also see that there is a downward sloping trend line intact on a daily chart. Let's click here and let's click here. There's your downward sloping trend line. So that is still intact, and I believe that we are going to test the 50-day moving average today, and we could even poke below it if there is no deal done. Once we get below the 50-day moving average, we've got another week before the election. I could see us coming down and testing that 100-day moving average somewhere around the 330 level. So let's take a look and see what we've got in terms of bearish possible trades. I'm in the scanner, clicking bearish. I'm going right into week after earnings. So this is a look back search where we're searching for companies that have posted earnings and that are weak relative to the market. I went through each one of these candidates, and one that stuck out to me was Netflix. You can see how Netflix has had multiple resistance right here at the 564 level. 1, 2, 3. That confirms that resistance. You can also see earnings right there after the close. That's what the A signifies. Boom. Right below the 50-day moving average after that earnings announcement. And here you can see follow through selling, and we are below the 100-day moving average. I think Netflix is a pretty good short here. Now, here's how I would play it. I would try to sell an out of the money bullish put spread keying off of that 50-day moving average and that gap. That resistance should hold. I don't want to go out too far. I certainly don't want to go out past the election, so I'm going to use the October 30th expiration cycle. That would be a week from today. And I'm going to go down to the 507.50s. I could go 505. You can see here that the 50-day moving average is 506.60. So that's a little bit close. That means that we could actually go through that a little bit and be in the money. I would prefer to try and stay all the way out of the money on these. So I would be selling the 507.50 calls and I would be buying the 510 calls. $2.50 between the strike prices. I would ideally like to get 50 cents for this. You can see that that spread is currently 15 cents bid, offered at 57 cents. We would need a little bit of a rally in the stock to be able to get that trade done at 50 cents. I would even take 40 cents in this particular case. I'm just going to bump this up so you know kind of where my limit is. 40 cents is what I would look to do. That's again selling the October 30th expiration date, selling the 507.50 calls, buying the 510 calls, doing that for a 40-cent credit. That expires a week from now. Stock is currently at 483, so it would have to rally more than 20 points in a week for us to be in danger. Again, this is a resistance level. This is a resistance level. So we've got a couple of resistance levels to lean on. We also have a downward sloping market trend line. Market first, market first, market first, no trade deal. I think you've got to be slightly bearish in here, especially if there's no trade deal that happens. So that's a possible trade for you to consider. I think Netflix also sets up well on a day trading basis. So let's take a look and see if we can find any other stocks that might be looking good. On the short side, Intel reported yesterday, really took a beating. You can see how it's down here on this long-term horizontal support level. I don't really see a trade in that. AXP is down after reporting earnings. You can see it reported before the open today. There is a longer-term wedge formation that's in play here. I would have to wait for that wedge to be broken. What the heck does that mean? Well, let's click and let's draw the trend lines. There's the lower end of that boundary, and there's the upper end of that boundary. You can see how the wedge is coming in here and how these lines are converging. If that 100-day moving average is broken, then I think here again you can sell an out of the money bearish call spread above that downward sloping trend line. This is not a particularly strong play because the stock hasn't done much. You can see how it's trapped in this trading range, similar to financial stocks. So let's see if we can find something better here. We're going to go into relative week 30, and I'm going to put that 5-minute chart back up on the market so we can watch it. And there we go. This is actually what I would call a bearish divergence, by the way, on the 10P indicator. When you have the market down, 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 the indicator up, 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 that tells you that this trend is intact and it's very strong. And we're just about to get a bearish cross. That bearish cross will set us up for another nice move lower. So that's how I would currently be playing it. These stocks are weak relative to the market. CRM is one of them. And you can see how it's testing the 50-day moving average. If it's able to get below the 50-day moving average, it's got a nice downward sloping trend here. Lots of red bars. I believe that CRM could be a nice little short for a day trade. You've got support here right around the 230, 250 level, so be aware of that, but plenty of room still on the downside. Take a look at other stocks here. LOW breaking below that horizontal resistance. 1, 2, 3. That's a resistance level. We break out above it. Now it's a support level, and that support level is being breached. That is what I call a failed breakout. So what? What's the relevance of a failed breakout? Well, if you're a buyer and you see this breakout right here, you start getting long and you buy, and where would your stop be? Well, I'm going to have my stop right at that breakout. So when the stock comes below that breakout, that support level that should have held, when it fails, anybody that was buying in here is going to be selling right here and taking profits or exiting before the losses start to mount. And that creates additional selling pressure on the backside. So yes, LOW looks like a pretty decent little short in here. Again, a day trading short. And there you can see it just took out the low of the day. Some pretty decent momentum. Relative week 30 search. See how easy this is? Got all of this already calculated. All you have to do is keep clicking through the symbols, keep looking for those technical patterns, keep looking for that relative weakness. There's a nice steady downward sloping trend line right here. That's on MasterCard. We already took a look at AXP. So the credit card companies are apparently weak today. They would love to see a stimulus plan because people are starting to run out of money, especially if they're out of work because of the coronavirus. So any kind of PPP, any kind of personal stimulus checks that would be sent out would have been fantastic for banks. In that absence, they're starting to come in. And we'll go down and take a look at a couple more here. I like when I go through these searches to see a stock that is already down. I don't want a stock that is rallying and simply pulling back a little bit. So I'm visually just going through to see if anything catches my eye. We already looked at low. So of course, Home Depot is also weak. Here you've got a little bit of a different setup. Remember on LOW, we had a failed breakout. Here you have a resistance level 1, 2, 3. Double top lower high right there. You can see how it's coming in and it's breaching that 50-day moving average and new low of the day here. So yes, this would be a short that I would consider. This is how we trade. So very important to go through the whole sequence. Market first, market first, market first. What is the market telling me? Market's telling me that it wants to go down today. There's a downward sloping channel. It's close. It's tested the 50-day moving average yesterday, right in there. We could continue to float lower. That means that I need to have a bearish bias today. That means that I focus on stocks that are in our bearish searches. That's all I've got for you today. If you like this content, please give it a thumbs up and make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss any of these trades. In every video, I make sure to include some actionable trade ideas for you. Thanks. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.